Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Benchmarks erased most of Monday gains, ending the session back in the red. Nifty below 18,000. Steep 600-point decline on the Sensex as the street eyes the all-important speech from Fed Reserve Chair Jerome Powell. IT bellwether TCS delivers an inline set of Q3 earnings, an almost 11% jump in revenues on a year-on-year basis. Company's COO N. Ganapathy Subramaniam tells BTTV that they expect to clock in 25% margin in the final quarter of this fiscal. IDBI Bank stake sale received a good response, not just from domestic institutions but foreign institutions, says DIPAM Secretary Tuhin Kantapande. The Secretary is also hopeful of completing divestment of companies already announced by the centre. Tata is all set to become India's first homegrown iPhone manufacturers, eyeing an assembly plant near Bengaluru. The company is looking to seal the purchase of the plant by end of March this year. More from the Tata stable. Group firms up its electric plans. Electric mobility subsidiary completes the acquisition of Ford's Sanand plant in Gujarat for a sum of 725 crore rupees. Let's shift focus to the big exclusive of the day. Government receiving multiple EOIs for a stake in IDBI Bank. The centre plans to fully exit IDBI Bank on the remaining stake post the acquisition, with hopes of completing the transaction by September next financial year. In an exclusive chat, Business Today's Karishma Sudani spoke with DIPAM Secretary Tuhin Kantapande to discuss the said exit plan from the lender and the disinvestment roadmap.
They're all in priority. Any transaction which has been approved by the cabinet as in principle, then that we have to structure the process and go through the bidding process and try and complete it. BEML and shipping are in different stages. They're relatively advanced stages. Their peculiarity for them has been the demerger, where a lot of assets, especially when they were not really core to the company's operation, needed to be separated out. And that was, in a listed company, the best way was to demerge it. And the demerger process itself is under the company's law, has to be carried out, and Ministry of Corporate Affairs had to be approached, and they have gone through the process as per the law. And it's in different stages. In case of BEML, for example, the demerger order has been out, and now the allocation and listing is in process. In case of SCI, we are waiting the demerger order, and following which, there will be clarity for the bidders who are already in advanced stages looking at it, for us to, give them an RFP for and invite the financial bid. In case of Concor, of course, as you know, that there was an issue of land licensing policy as to the clarity on the kind of leases which will remain going for after post disinvestment, including, for example, what kind of tenure would be available, what will happen to the existing land parcels, what will be the terms and conditions of lease rents that will be applicable. That was Railways broadened the scope of their policy to include various other things under PM Gati Shakti, and that was a time, I think, was taken by Railways to reorganize their policy, which was done, and it came in October. And when it came in October, thereafter we are now on to the job of framing the AOI, and hopefully we would be issuing the EOI soon.
Right. So there's a lot on your plate right now, but is there a possibility of new PSUs being added to the pipeline in the coming year for disinvestment?
Well, we have a new PSC policy, and that PSC policy not only says that, how it will be going forward, the disinvestment will be done, and what will be done for the strategic sector, what will be done for the non-strategic sector. It also defines that this disinvestment itself is a calibrated process, and you have to do it as per the timing, timing of any disinvestment transaction will contingent upon several factors, and a calibrated approach has been what the policy has narrated there.
But the department is identifying the assets as per the BSE policy.
I mean, that's a process which is ongoing process, but we have to see what we can chew and how much we can do and what are the possibilities, and you have to keep on thinking about the way to do that. As you know, the disinvestment is not a one-way process.
Right.
It is a two-way process in which we need to have bidders and interest equally. Otherwise, we may come out with an AOI and not get a response. I mean, that's neither here nor there.
Nor there, right. So you did mention about Shipping Corporation of India, and that reminds me that recently Ministry of Corporate Affairs did a hearing. In fact, just the last week, and a decision is expected on, of course, their decision is expected on the demerger matter. Have you heard something about that? When is the update expected?
No, I think, I believe they have completed the hearings, and we await the order.
Right. So one last question before we end this interview, and I'm not addressing the elephant in the room, which is the target that we all always talk about, but I'm trying to put more focus on the fact that in the last few years we have seen that the dividend receipts have done much better and well when compared to the disinvestment receipts. I'd like your comment on this, that how's it going on the dividend side, and further going, are you going to put more focus on that aspect?
I think that's a good question, because I think obviously I think always Deepam, for example, we have two budget lines in terms of receipts. One is the non-tax revenue, which is the dividend, and another is the miscellaneous capital receipts, which is the disinvestment receipts. Actually, and to some extent, they are contra. If you disinvest the shares, you have less possibility of dividend in future. Because basically disinvestment is, if you have a dividend income model, basically it's a capitalized value. If you capitalize the dividends over a period of time, that's the upfront value that you receive of the shares. So basically if we disinvest the shares, future dividend income is reduced. Money is fungible. Government requires the money both ways. So the narrative must be also that we should look at it together. How much are we doing? Because in some ways, in case we are not able to proceed with, because of market factors and others, that disinvestment, but at least we, in many cases, our government companies, government PSUs are fairly dividend-paying companies, and to that extent they are profitable, to that extent they give dividend, to the extent they can also carry on capex from the resources. Well, then in that case it's equally, sort of important. So we should take a balanced view in terms of, where the receipts are coming from.
After a robust start to the week, the market today back in the red. Some hawkish comments from Fed Reserve officials coupled with the anticipation of the Fed chair's speech later today, keeping investors on tenterhooks. It was largely a day in the red. Both benchmarks closed with cuts of 1%. A 630-point decline in the Sensex at 60,115, and the Nifty also ending the session close to 200 points lower, back below 18,000. Both indices, however, came off the day's low just before close. Most sectors navigated in the red, barring marginal to flattish gains in pharma and healthcare stocks. PSU banks were among the top laggards in trade today. Among the top losers, Adani Enterprises, Bharti Airtel, Eicher Motors, Adani Ports and SBI. Few stocks in the green as well. Tata Motors roomed as much as 6%, followed by Apollo Hospitals, Hindalco, Power Grid and Divi's Lab. IT major TCS reported an 11% year-on-year growth in Q3 profit. The consolidated revenues for the quarter jumped 19% on a year-on-year basis. In constant currency terms, revenues were up 13.5% year-on-year. PTTV's managing editor Siddharth Zarabi spoke with TCS COO N. Ganapathy Subramaniam. Here's an excerpt of that conversation.
It's been a very satisfying quarter for us, where we grew the business by about 13.6% year-on-year on constant currency terms, and we clocked in a total contract value of about $7.8 billion, which is again very broad-based across industries, and $2.5 billion out of that is coming from banking financial services, which is our largest vertical. Overall, there is a good deal momentum, good pipeline opportunities that we see. In terms of markets, I think US and UK and rest of the world are looking all right, except Europe, where there is certain amount of cautious optimism that people, and especially in our customer base, are expressing. In the sense that, look, they want to probably conserve cash. They want to see how the winter, especially month of January and February, are going to be handled from an energy perspective, and making sure that the factories are kept running without, because the minute, from the process industries, if you shut off, it's a 6 months before they can again get back to normalcy. So there are certain amount of caution that we see in Europe, but barring that, things are looking good. And technology is the response, whether you want to be efficient, whether you want to be looking at growth, whether you want to be creating experiential differentiation to your clients. So overall, I believe that the technology spend is going to remain secular and committed.
Would it be fair to assume from what you just told me that you feel that there will be a recovery in the European market 6 months down the line?
I certainly believe so. I think, as we speak, customers are pursuing those programs, but then at a slower pace. The decision making on large transformation programs is something that, they are delaying a bit. But then in terms of, being efficient, vendor consolidation, or cost and optimization type of opportunities, they are advancing it. There is, we don't see any issues with respect to that. So it's a really, growth, efficiency, innovation, all the three are important. And I think, it's a cycle that Europe is going through. And from my own perspective, I think come March, April, I think the situation will certainly ease up in Europe.
Okay, that's a good point. What about the challenges as far as pricing is concerned, not just Europe, but globally, because of the overall weakness that we are seeing at a macroeconomic level?
Pricing wise, as far as technology is concerned, there is a scarcity of skill sets. There's no doubt about it. Specifically in certain niche areas, like, if you are really good in data, machine learning, and how do you teach algorithms, those kind of skills are extremely critical skills to have. Likewise, cloud architects, architecting systems in the cloud for scale and performance is again a very important skill set. So there are certain skills that you are looking at which are going to be pricey, which are going to be, you will command a premium, no doubt about it. But in our business, what we do is that we have a very long-standing relationship with customers with whom we work on old technologies, new technologies. There are efficiency-related things, there are innovation-led projects, there are growth-related projects. So it's a combination. So as a combination, we believe that we have the right price for the right value that we are delivering, and we are happy with where we are. But commanding premium where it is required. At the same time, wherever we have to disrupt ourselves, we keep disrupting ourselves and deliver that extra kicker for the customers.
What is the outlook as far as margins are concerned?
Margins are concerned, we improved our operating margin by about 50 basis points sequentially from Q2 to Q3. And we are staying focused to improve the margins further from where we are. And then as a first goal, we want to be where we were last financial year to get to about 25% in the coming quarter. And then from there on, see how we could improve further.
We spoke about manpower in a sideways mention, but it seems from the numbers that I'm looking at that attrition levels have come down. But not very significantly. Where do you see attrition from here on?
Yeah. See, attrition quarter on quarter, there is a reduction, no doubt about it. In absolute numbers, we are seeing that it is tapering down. And I think while we report the last 12-month on a LTM basis, if I really look at quarterly annualized attrition numbers, it has really come down by 6 percentage points already. So from where I see things, in the next 1 or 2 quarters, attrition should stabilize, the numbers should stabilize, and we should be back to the pre-pandemic level that we used to enjoy, and that should augur well for the industry as well as for TCS.
That was the TCS management breaking down the earnings for us. But now let's shift focus to what global brokerage firms make of the IT bellwether's performance. A slew of brokerages have released their views, some bullish, some bearish, but most cautious. JP Morgan has gone ahead and maintained an underweight stance on TCS with a target of 3,000 rupees, citing caution over soft deal wins and a declining book-to-bill. Jefferies, however, has a hold rating on the stock with a target of 3,500 rupees. The Jefferies note shares concerns over the declining headcount and the book-to-bill ratio falling to a 3-year low. They expect that these factors could lead to a sharp growth moderation. Morgan Stanley sounding a little bit optimistic with an equal weight rating and a target of 3,350 rupees. They believe that a balanced management commentary and resilient performance in Q3 could mean good things for the company over the next fiscal. Nomura has released the most bearish view, a reduced rating with a target price of 2,850 rupees. A margin miss in Q3 could weigh on their near-term visibility. Finally, Citi has a sell rating on TCS with a target of 2,990 rupees. Going forward, they expect a muted Q4 from the company. Let's take a break, but before we go, veteran industrialist and Tata Sons Chairman Emeritus Ratan Tata went down the memory lane and shared a black and white picture of himself with his brother Jimmy Tata. According to Tata, the picture was taken in 1945. He shared this picture on Instagram and said their childhood days were a happy one as nothing came between the two brothers. Incidentally, Jimmy Tata never joined the family business, preferring a quiet life. Living in a 2 BHK apartment in Colaba, he stays on the Tata Sons board. Shifting focus to some important views coming in from the Finance Minister earlier today. Speaking at the 17th Pravasi Bharatiya Divas in Indore, charting a case for Brand India and urging people to partner with small, medium and nano businesses in order to harness India's entrepreneurial skills going forward. Listen in.
Even as you promote the Indian brand, Brand India, even as you surround yourselves with India-made goods and services, I would invite you to partner with Indian businesses, small, medium, big, nano, partner with them so that India in the next 25 years gets your potential for the entrepreneurial skills that you may have. So Indian businesses here get that advantage from you, and together we build that India which can be developed by 2047.
It was a poignant scene outside the Baikala Women's Prison in South Mumbai this morning. A former ICICI Bank MD and CEO Chanda Kochhar was released from custody after being granted bail by the Bombay High Court. Waiting for her outside the prison gates was her son Arjun, who welcomed her back with a big hug. After a few moments, Arjun escorted his mother to a waiting vehicle. Incidentally, it was Arjun who was slated to get married in Jaisalmer this Saturday. The Kochhars had chartered a jet to fly top industrialists to the wedding venue. The marriage was temporarily called off after arrests of Chanda Kochhar and her husband Deepak in the Videocon loan fraud case. Just days ago, Microsoft CEO Satya Nadella created waves by interacting with ChatGPT at not just one but two public fora. Now, according to reports, Microsoft is in talks with the artificial intelligence bots creator OpenAI for a massive $10 billion infusion. Sources say the proposal envisions Microsoft investing the amount over multiple years. The investment is likely to value OpenAI at about $29 billion. ChatGPT was launched at the end of November and had picked up 1 million users in less than a week. OpenAI, the organization behind it, is co-founded by Elon Musk and Silicon Valley investor Sam Altman and makes money by charging developers to license its technology. Tatas are on the verge of becoming the first Indian company to manufacture products for Apple. The group is reportedly very close to buying the iPhone manufacturing plant near Bengaluru, currently operated by Wistron.
The Apple iPhone 14 is already being manufactured in India. And now, in one of the biggest boosts for Make in India, the Tata Group is all set to become the first Indian manufacturer of the high-tech handset in the world. According to sources, the group has been in talks to acquire a plant assembling iPhones. The plant is 50 km east of Bengaluru and is run by Taiwan's Wistron. The two have reportedly been in talks for months, and the deal is expected to be signed as early as March. Wistron is one of the 3 Taiwanese iPhone manufacturers in India. The others are Foxconn and Pegatron. Reports say Tata could become a majority shareholder in a joint venture between the two. And while Tata is expected to oversee the manufacturing operations, Wistron would lend support. The plant has an area of 2.2 million square foot with 8 iPhone assembly lines. The factory employs nearly 10,000 workers, including some highly skilled engineers and other staff. If the deal goes through, as a bonus, Tata will also be eligible for incentives under the government's production-linked incentive scheme from the new financial year. Meanwhile, Tata is deepening its ties with Apple elsewhere as well. It has accelerated hiring in its factory in Hosur near Bengaluru, where it produces iPhone components. The company has also announced that it will launch 100 Apple stores. For Apple, it's a win-win situation. The tech giant has been on the lookout for alternate manufacturing hubs since its supplies out of China were disrupted. First due to the draconian COVID lockdowns, then because of unrest at its largest plant run by Foxconn. Bureau Report, Business Today Television.
All roads will lead to Central Mumbai St. Regis Hotel on the 13th of January for the Business Today Banking and Economy Summit. The grand spectacle will be followed by a spectacular awards ceremony to honor India's best banks and fintechs. The event is being attended by the biggest and most influential faces of the industry.
The Union Minister for Road Transport and Highways, Nitin Gadkari, the Union Minister of State for Finance, Bhagwat Kishan Rao Karad, Governor of the Reserve Bank of India, Shaktikant Das, Chairman of the State Bank of India, Dinesh Kumar Khara, Doyen in the field of finance and economy, KV Kamath, and the creme de la creme of the Indian banking and financial services industry all be in attendance at the Business Today Banking and Economy Summit in Mumbai this Friday. The day-long summit, comprising a dozen fireside chats and panel discussions, will have the best minds in the economy, banking and financial sectors debate and discuss the future course of the domestic economy facing global headwinds, the role of banks and non-banks, digitization and sustainable finance challenges. Among the big names are Amitabh Chaudhary, who heads the country's third largest private sector bank, Axis Bank. Other high-profile bankers who will be participating include Hitendra Dave, CEO HSBC India, Ashu Khullar, CEO Citibank India, Kaustubh Kulkarni, Senior Country Officer JP Morgan India, Sanjeev Chadha, MD and CEO Bank of Baroda, V. Vaidyanathan, MD and CEO IDFC First Bank, R. Subramanya Kumar, MD and CEO RBL Bank, Murli Ramakrishnan, MD and CEO South India Bank, Pralay Mondal, MD and CEO CSB Bank, and S. Krishnan, MD and CEO Tamil Nadu Mercantile Bank. In fact, 3 former SBI chairmen will participate in the summit: A.K. Purwar, Rajneesh Kumar and Arundhati Bhattacharya. KV Kamath, who went on to head the Shanghai-based New Development Bank set up by BRICS countries, will talk about the future of banking in an era of uncertainty. Other highlights include a panel discussion on non-banking finance companies, an economist panel as well as a session with modern-day fintechs. The summit will be capped by the 27th edition of the BT KPMG Best Banks and Fintechs Awards, with 13 awards presented by the Union Minister of State for Finance, Bhagwat Kishan Rao Kharad. Fireside chats with RBI Governor Shaktikant Das and the Union Minister for Road Transport and Highways, Nitin Gadkari, will round up the power-packed summit. Bureau Report, Business Today Television.
And that's where we leave it on the show tonight. Thanks so much for watching.